Hi there, how are you guys doing today? So we're coming to you again for another PPP Excel workbook tune-up, but my focus again this week is going to be on the employee retention credit and the PPP. I've done a few case studies, and some of these are based on factual information and real life experiences we've had. In the last week to 10 days, it feels like all we've been doing is pretty much living and breathing ERC, employee retention credit. So I wanted to share some information that I've learned and some case studies and some examples with you. I've gotten a lot of questions from people who are now a little bit confused with PPP and the employee retention credit, and for good reason. It is incredibly confusing. I think I've got a strategy that you can kind of apply to your circumstances if you are a PPP borrower with an employee retention credit potential. Where we're getting into a lot of confusion, it seems, is the qualification for the employee retention credit. I'll talk about those for just a second, but generally speaking, if your business had a decline in revenue of 50% or greater in any one quarter in 2020, then you'll qualify, and you'll continue to qualify until your business recovers at least 80% of the revenue from the prior year. So for example, in Q3 of 2020, if your revenue was 82% of the amount from Q3 of 2019, then you would have recovered at least 80%. You would continue to qualify for the third quarter, but then you wouldn't qualify for the fourth quarter. And you'll see that in some of my case studies. The other qualification is if you were subject to a partial or full shutdown order, you can also qualify for the employee retention credit. And that's where there's some confusion coming into play here. A lot of people that have emailed me in the last week have told me that they were ordered to shut down, but they didn't have a 50% or more decline in gross revenue. That doesn't matter, you still qualify. And vice versa, they've had a significant drop in revenue, but they were never ordered to shut down partially or fully. And I have actually got a real life situation where I've got a client who actually has qualifies for the employee retention credit for all 4 quarters of 2020 because their revenue decline was greater than 50% for all 4 quarters. Now we know that for the first quarter of 2020, the effective date essentially is wages paid after March 12th, which so for the first quarter of 2020, we're only looking at wages paid from March 13th to March 31st, not the entire first quarter. And you'll see some references in the case study specific to that on some of the examples that I give. Again, I encourage you to email me questions. I've got a lot in the last week. The majority have pertained to employee retention credit. The lesser amount have been for PPP forgiveness questions. We're going to get back on top of the PPP forgiveness next week with our tune-up. We're going to probably focus on maybe a walkthrough of a 3508S, which a lot of you, if you're aware of the changes in the form, it's a certification. But what I want to emphasize with the 3508S is that the math or the calculations still need to be done when you do your PPP loan forgiveness. Now, I've been told by a couple banks that the SBA is in the process of getting their system up and running to accept the 3508S. So I don't know right now of any lenders that are actually accepting the form, either paper form or electronically or through a portal. But I think that that's going to start up in the near future. For us CPAs and tax preparers, we're probably a little afraid of the fact that that's coming up in the near future because I think it's going to really gain momentum towards the end of this month in March, and that's our busiest time. So we're probably going to want to look at prioritizing some of these applications based on necessity, in as much as these businesses might have several months before they actually have to file the forgiveness application. So it might not be something a CPA would necessarily want to do during tax season. And maybe we'll touch upon that a little bit next week or the week after. Remember, we're doing these tune-ups weekly right now. Right now, they're scheduled to air on Saturdays. We tape them on Thursdays, just so you know. That's why there's no questions and answers session to part of this. I do welcome emails and questions subsequent to watching this. We do tape it. We do send out a link for it. You can share the link. It's a free webinar, and it is posted on YouTube as well. I got to always make a little bit of a shameless plug for the PPP Excel workbook that we've developed. You can purchase that at pppexcel.com, and it gets updated with every change there is. It's currently updated for the new law that was signed on December 27th and the IFRs that were published by the SBA, but we're really expecting more guidance soon in the form of revised FAQs, because the SBA is telling us that the 53 FAQs they had previously published, I think it's 53, it might be 55, haven't been updated for the new law. So we're going to see some changes there. Might come out soon. That's why I'm mentioning that. So keep your eyes and ears open for that. The other plug I want to make real quick, which is this great employee retention credit guide that Alan Gassman's team has put together. I've read it cover to cover. It's really written well, easy to understand. If you're a business owner that is qualified for the ERC or a professional, I encourage you to get this. It's probably the best single resource there is right now on the employee retention credit. So I'm going to dive right into a couple case studies here. Try to get through, I think I've got 5 of them here. Try to get through them in the 30 minutes. I might run over a little bit, and I'll try to take my time in walking through these. And some of these are based on what I've actually seen in the last about 10 days. So a lot of it is factual. I bent the facts a little bit to make sure I could cover a couple different scenarios. If your specific scenario is different, obviously it will be from any one of these, and you have a question for me, please email me. I'll certainly try to help you. So in this particular case study, this is a business that was never partially or fully shut down. So this was a business that may have been an essential business, but they did have a decline in revenue in Q2 of 60%. That's a decline from Q2 2020 versus Q2 2019. And then in the third quarter, they recovered at least 80% of their revenue for Q3 2020 versus Q3 2019. So what that tells us is that this company qualifies for the employee retention credit for quarters 2 and 3 of 2020. Now, they also obtained a PPP loan in the amount of $200,000 on April 18th, 2020. So based on that, and what I'm finding with this is that the best way for you to figure out whether or not you can take an employee retention credit and you also had a PPP loan is to really lay out a calendar, like a timeline, and identify the dates that you were subject to the PPP rules and the dates in which you qualified for the employee retention credit. The clients that we worked on this last week, it just seemed like it was a lot easier when we literally pulled out a calendar and did a timeline for those. So you're going to see some references in there, and I've actually coined a phrase for some timelines that affect the ERC versus PPP. So in this particular case study, this company qualified for the employee retention credit for all of Q2. That's April 1st to June 30th. Now they got their PPP loan on April 18th. So I know for a fact I can use payroll that was paid from April 1st to April 17th towards the employee retention credit. Then the next step gets a little more complicated, because then I've got to count wages that were paid to my employees from April 18th to at least October 2nd. That's the end of the 24-week covered period. And you're going to see in my examples, I almost always refer to the 24-week covered period, but I don't necessarily mean to tell you that you have to count all of the payroll for that period. You just have to count enough payroll for that period so that you can attain 100% PPP loan forgiveness. Now, we all know that calculating PPP loan forgiveness is kind of like one of these algebraic equations that we had to live through in high school. You have to pick certain expenses. You have to make sure you've accounted for all the expenses. So I realize it's not very cut and dry, that there are some nuances to that calculation. We do know for certain that on the PPP loan forgiveness, at least 60% of the forgiveness amount must be represented by payroll costs. So let's say that you have a company that has a lot of rent expense and utilities expense and other expenses that qualify for PPP forgiveness. And let's say their PPP loan is $200,000. You know that you could use up to $80,000 of other PPP expenses besides payroll, and you then would have to use at least $120,000 of payroll or wages to get the full PPP forgiveness at the $200,000. That's assuming that there is no FTE reduction quotient issues. There's no salary and pay rate reduction issues. So those are all formulas and calculations that you have to make. So what I've learned from this experience in just the last week or so, you really have to, the step-by-step process is you really have to calculate your PPP loan forgiveness first and figure out how much payroll you have to use from your applicable covered period for the PPP loan forgiveness. And then any payroll that's left over or in addition to what you used, then you can turn your focus on the employee retention credit. And this is going to be a tremendous amount of work, but it could result in a tremendous refund to you for the employee retention credit. So don't give up and throw your hands up and say, I'm just not going to deal with it because it's not worth it, because you can find that it could be really worth it. So back to my case study here. This particular company had wages of $400,000 paid within that 24-week covered period. So because they qualified for the employee retention credit in quarters 1 and 2, which are calendar quarters, very easy to measure, we know that they just need to pull enough wages out of that covered period wage period to get their full PPP loan forgiveness, and then any excess wages or balance of wages over that can be used for the employee retention credit. So you can see how that can get to be a really complicated calculation, because the PPP forgiveness, you do measure the wages per employee because we have some limitations on how much we can pay. But if you're not over the wage limits, which I mentioned at the end of this show, then that's all you really need to care about. But with the employee retention credit, we know that we have to cap the wages for the calculation at $10,000 per employee for the entire year of 2020. And again, my focus on this whole webinar for today is going to be strictly 2020. Please don't get confused with 2021 ERC. It's a different animal than the 2020 ERC. We'll do another webinar on 2021 ERC rules at a later date. So back to my case study one more time. So in case study number 1, this is a good example of a company that has to measure payroll for a certain period, then do PPP forgiveness, see how much of that PPP wages are left over, if you will, are available, and then add that to the wages that were for that April 1st, April 17th period to figure out what their employee retention credit is. You can see how complicated that can get. Case study number 2 is an example of a company that had a shutdown order, and this is kind of mirroring a shutdown order for a dental practice in Florida. Most dental practices or oral care practices in Florida were ordered to shut down for a specific period of time in March, and then they were allowed to reopen around May 4th based on the state order. That was a state order, so it covered the entire state of Florida. In this particular case study, though, the company never had a 50% or more decline in their revenue in any one quarter of 2020. And this is a situation I've seen a couple times now in the last few days. So the mentality is I don't qualify because I never had that decline in income. But in this particular case, they do qualify because they were under a executive order from our governor to actually almost fully shut down their business. All they could provide were emergency services. In this particular example, again, this is kind of like a dental practice. They got a $150,000 PPP loan on April 20th. So in their particular example, and this is interesting, they can use wages paid from March 18th, the effective date of the closure order, to May 4th, the effective date of the end of the closure order. And because they didn't have a revenue decline in any one quarter, that's the only payroll they're allowed to count in the PPP forgiveness, in the employee retention credit calculation. So in this particular case, even though they got their PPP loan on April 20th, they really don't have to start counting payroll for PPP forgiveness until May 5th, so long as they have enough wages to gain 100% loan forgiveness with the PPP, for the PPP. So in this particular example, their covered period, their 24-week covered period ends on October 4th. Their payroll for the period May 5th to October 4th was about $300,000. That is enough wages for them to get full forgiveness on the PPP and still use the wages from April 20th to May 4th towards their employee retention credit. So this is a really good example of not so much a shell game, but a planning strategy that I think everybody's going to have to take into consideration now. Originally, we focused on the PPP and making sure we had enough payroll. We all remember originally it was 8 weeks, and then when they extended it to as much as 24 weeks for the covered period, it really opened up a great possibility for almost everybody to get 100% loan forgiveness. As a matter of fact, I've only worked on 2 PPP cases so far in which the company was not able to use all of their PPP money on payroll, even in the 24-week period. Both of those were businesses that were severely affected by the pandemic, and they were virtually shut down, and they pretty much laid off the vast majority of their employees. So in the couple hundred or so I've seen, maybe 300 I've seen, otherwise, they were all able to get 100% loan forgiveness easily within that 24-week period. So that's why I think this is so important, because you might have a situation where you can possibly maximize your employee retention credit and maximize your PPP loan forgiveness. And that's why this is so important. In case study number 3, here's another situation where a business was never partially or fully shut down at all. They didn't have any order in which they were even required to partially shut down. They were an essential business, but they were a business that was very much tied to other businesses that were shut down or had severe losses during the pandemic. And so they show a revenue decline of greater than 50% for all 4 quarters of 2020. So this is an interesting example of a company that clearly qualifies for the employee retention credit and technically qualifies for all 4 quarters, even though, as I mentioned earlier, for quarter 1, 2020, we only have about a 2-week period that we actually have the credit available to us in quarter 1. So in this particular case, this company qualifies for the employee retention credit for the entire period of March 13th to December 31st, 2020. Now we know we can't use all that payroll, and the wages in that period would probably exceed the employee retention cap anyhow of $10,000 per employee. So don't worry about that for right now. Let's focus on the PPP, and then we'll talk about the ERC. So in this particular case, this company obtained their PPP loan on April 24th, roughly $400,000. So now we know that starting on April 24th, I've got to start counting wages towards my PPP and come up with enough wages in my 24-week covered period, or at least a portion of my 24-week period, to attain 100% loan forgiveness. Now, for the ERC, for this particular company, I know I can count 100% of the wages that were paid from March 13th to April 23rd. And then I know I can count 100% of the wages that were paid from October 9th to December 31st, because that's outside the covered period. And I'm actually coined those as the bookend periods, because this is an example of a company that qualified for the employee retention credit both at the beginning and the end of their, or before the beginning and after the end of their covered period. So they're going to want to calculate what the employee retention credit is for those periods. And in those periods alone, they might have $10,000 of wages for some of these employees, and that's the cap in wages you can use for the ERC. And then they're going to look at their covered period, and they're going to try to maximize the loan forgiveness based on the wages that were paid in the covered period. So in this particular example, and within the covered period, they had $960,000 in wages. Clearly more than you need to get the PPP loan forgiven. So what they'll do is they'll use enough of those wages to get full forgiveness on the PPP loan, and then any balance of the wages that were paid during that period can be used for the employee retention credit that were paid during the covered period. So far, we haven't been told otherwise. We haven't been told that you can't use wages that were paid during the covered period for the ERC. As a matter of fact, the current guidance is that you're supposed to actually apply wages to the ERC first, and then by election, you can apply them first to PPP forgiveness. And we'll talk about that in a minute as well in another case study, because we don't know how to make that election yet. So in this particular example, this is a really good example of a company that's likely going to be able to maximize their PPP loan forgiveness and also possibly maximize their employee retention credit, which is a great win for them. And it is a bit of a windfall. Now, there's some tax issues related to the ERC that I'm going to try to touch upon at the end of this presentation. Case study number 4, company that was partially or fully shut down from March 18th to May 4th. They did have a decline in revenue of 60% in quarter 2. They recovered at least 80% of the revenue in quarter 3. So right now that tells me that they technically qualify for the employee retention credit from March 18th to September 30th, because March 18th was part of their closure order date, and then quarter 2 and quarter 3, they qualify for the employee retention credit because of the revenue decline. So this is a good example of a company that gets kind of like both qualifications, part of it for a closure, part of it for a revenue decline. They obtained a PPP loan of $160,000 on May 10th. So based on those facts, I know I can use my wages paid from March 18th to May 9th towards the employee retention credit. I know that I'll need to calculate enough wages that were paid between May 10th, the start of my covered period, to October 24th, the end of my covered period, so that I can get 100% loan forgiveness. But then I kind of threw a little bit of a curve here at you, and I said, well, what if they didn't have enough payroll? What if they had qualified wages of only about $120,000 during the covered period? Then, and they didn't have enough qualified expenses to necessarily get the full loan forgiveness. Then in that particular case, they're technically going to need to make the election to use the wages during the covered period for the PPP loan forgiveness, and they're only going to qualify for the employee retention credit for the wages that were paid between March 18th and February 9th, because they need all those wages that were PPP covered period wages so they can get their loan, their PPP loan fully forgiven. And I'll just segue real quick into something I add later, but the reason for this is because the PPP loan forgiveness is essentially dollar for dollar. I got $160,000, I get forgiven $160,000. On the employee retention credit, I get a 50 cents on the dollar tax credit. So if I paid $10,000 in wages to an employee, I'm getting a $5,000 credit. So it's still good, don't get me wrong, it's still very good, but it's not dollar for dollar like the PPP is. So that's why we always want to make sure we maximize our PPP loan forgiveness. And then the other issue with the employee retention credit is when you do get that $5,000 credit, or when you earn that $5,000 credit, you have to reduce your deductions on your tax return for that credit. That's a common procedure that's been done before. So with that particular case, you're going to be reducing your expenses or your deductions on your business tax return for the credit amount. That, remember, we don't have that issue with the PPP loan anymore. Originally we did, and thank goodness Congress fixed that for us in December. So now we don't have the tax hit that we thought we were going to have with the PPP loan forgiveness. We're still going to be allowed to deduct those wages we used for PPP loan forgiveness, even though the PPP loan is forgiveness is not taxable income to you. So that's where the employee retention credit isn't quite as good as the PPP loan forgiveness. My final case study here, this is a company that was either partially or fully shut down, and they were both. They were fully shut down for a short period of time, and then partially shut down, and then partially shut down. This is a restaurant, by the way. So in Florida, restaurants were completely shut down for a short period of time. Then they could do takeout and delivery. Then they could do outdoor seating. They could do 50% capacity, and then they were finally allowed to reopen completely. My dates might not be exactly right in the example, but that was pretty much the path that was followed. Now, a lot of restaurants got as creative as they could get with takeout and delivery and turning their restaurants into pantries to be able to sell grocery items. And in doing so, they were able to generate enough revenue. And so in this particular case, they didn't have a 50% or more decline in gross revenue in any quarter of 2020. They were able to at least have 50% of the prior year amounts in each one of the 4 quarters. Now, they will still qualify for the employee retention credit for those closure dates because the revenue decline was nominal. And if you read the IRS's frequently asked questions about how a closure order affected a business, they do mention that you still need to show that the business was affected by the closure order, but their reference right now, it looks to be, is just a nominal. So you've got to show some effect from the closure order. In this particular case, the company got a PPP loan on May 4th. So we know in this particular case, then the closure order started on March 18th. They got their PPP loan on May 4th. The wages paid from March 18th to May 3rd can count towards the employee retention credit unfettered. There isn't any limitations because the PPP loan didn't even exist during those dates. And then they can start counting wages from May 4th onwards for their PPP loan forgiveness. Now, their 24-week covered period ends on October 18th. Their closure order or partial closure order was stopped on September 25th. So in their particular case, they can't count any wages obviously past October 18th. They can't even count any wages past September 25th for the ERC. So in their particular circumstance, they're going to want to use enough wages from the covered period such that they attain 100% loan forgiveness, and then they'll be able to use all the wages from March 18th to May 3rd for the employee retention credit. And if they don't have enough wages to sufficiently get the loan forgiven in their covered period, they might even have to pay back part of their PPP loan. So here's an example of a company that, even though they couldn't get 100% PPP loan forgiveness, they still even qualify for some employee retention credit. It's not a great circumstance to be in, but it's certainly not a bad thing. It's better than no employee retention credit at all. So these last 2 slides are just general information, kind of takeaways, and it's really what I want everybody to look at. The very first question you have to ask yourself is, do I even qualify for the employee retention credit? Hopefully we'll get some more guidance from the IRS on the credit. And that's one thing I want to point out real quickly too. I think I mentioned last week just briefly, the employee retention credit is a tax issue. It's actually a payroll tax issue, but it's also an income tax issue, as I mentioned earlier. The PPP loan is the SBA, the Small Business Administration. A lot of people are getting confused and they're thinking that the SBA and the IRS are like one and the same, and they're not. And I think that's part of the challenge here is that we've got different rules for each one of these things. We've got different wage caps, we have different qualification periods, we have different qualifications in the first place. So I think that's where it's creating a lot of confusion for some people. But what I've learned is if you kind of flow chart this mentally, the first thing to determine is whether or not you even qualify for the employee retention credit. And then if you do, what is your specific employee retention credit qualifying period? And remember, that might be periods. You might have those bookends I mentioned earlier. You might have some time before you got the PPP loan and some time after the PPP loan covered period ended that might qualify for the employee retention credit. So you got to look at those periods. Then you look at your PPP covered period. And there really isn't any reason why you shouldn't look at the entire 24-week period now. You don't have to necessarily count or use all of the wages in the 24-week covered period, but remember, you can use all the other expenses, rent and utilities and so forth. So if you get, say, 60%, that 60% threshold for the PPP loan forgiveness, if you can get that out of, say, 14 weeks of payroll in your covered period, there's no reason why you still can't count 24 weeks of rent and utilities and so forth for the other 40%. And therefore, you minimize the amount of wages you actually have to use for the PPP loan forgiveness. So keep that in mind. The next thing to keep in mind for 2020 is that the wage cap per employee is $10,000 on a cumulative basis. 2021, it's on a quarterly basis, but again, don't want to confuse you on that. Let's stick with 2020. Wages that can be used for PPP loan forgiveness, assuming you go a full 24-week covered period, is $20,833 per owner employee and $46,154 for non-owner employees. So you can see where it gets a little confusing there because we have different wage caps, unfortunately, but it is the rule. So remember, you cannot double dip. That's the one thing you got to always remember. Don't ever count the same wages for the ERC that you do the PPP and vice versa. That's like the first goal you want to have, or the first rule you want to always keep in mind. Plotting out the payroll on a timeline does help. I think that's what you'll see. We've done that on a couple clients, and it seems like that's the easiest way to figure out what wages actually qualify for the ERC. Somehow you're going to need to specify what wages you're using for the PPP loan forgiveness. I had a conversation with a banker earlier this week and was explaining that to him. He didn't know what I was talking about. So hopefully we'll get some guidance on that at some point. It may be just a situation where you literally tell your lender, these are the wages I'm using for PPP loan forgiveness, and the rest I'm going to use for the employee retention credit for whatever period I qualify. Keep in mind that with the employee retention credit, you lose the deduction for the applicable Social Security tax and the wages. There's a formula in the worksheet for the 941 when you calculate the credit that shows you how much goes towards Social Security tax and how much goes towards wages. For the credit, it's called a non-refundable and refundable portion of the credit. So keep that in mind because of the fact that you'll have to adjust your tax return for that. This makes the employee retention credit a little less beneficial to you tax-wise than the PPP loan forgiveness, because the PPP loan forgiveness is really a big win if you think about it, because it has it doesn't create a tax problem for you. And the employee retention credit won't necessarily cause a tax problem for you. You're going to get a refund back on the credit from the IRS, but you're going to lose the deduction in your tax return. So there is some trade-off there. One of the things that we believe you'll need to do is that you'll need to calculate the employee retention credit before you finalize your 2020 business tax returns, because the credit is a 2020 tax credit. And so therefore, even if you file a tax return and go back and amend the tax return, you're then going to have to make that adjustment for the non-deductible portion of the expenses. That's how we understand the rules to be right now. So kind of keep that in mind, that it might mean that we have a lot of businesses that have to file extensions for 2020 because we're all going to be working on figuring out what the employee retention credit might be. So that's a wrap up today. I think I went a little past 30 minutes. I'm sorry about that. I do want to wish everybody a happy Valentine's Day on Sunday. So let's share the love, and let's work towards getting the maximum employee retention credit we can get and 100% PPP loan forgiveness. And that's it for now. If you guys have any questions, please email me. I'm happy to help you wherever I can. Take care.